All right, let's get right back into our comprehensive analysis of BASED. In this explainer, we're actually putting the tech and the product to the side for a minute. Why? Because to truly understand an asset's potential and its risks, you have to follow the money. We're taking a strict measured, data-driven look at the capital architecture here. Who funded it, the strict rules governing its token supply, and exactly how the public markets are pricing it right now.
Welcome back to NBZ Research. This is part 2 of our full BASED deep dive. In our last explainer, we covered the project, team, tech, and use cases. Today, we're going deeper.
So here's our roadmap for today. We're going to cover investors and funding, tokenomics and supply, followed by a market overview, and finally, exchange listings and markets.
Let's kick things off with Section 1, Investors and Funding, looking specifically at private capital backing. Let's ground ourselves in the core financial metric for this project, $11.5 million. That's the exact amount they raised in their Series A funding round back in February 2026. Now, why does that number actually matter? Well, $11.5 million is a seriously substantial war chest for a consumer crypto application. Having this kind of capital runway means the team can aggressively expand geographically and build out their infrastructure, totally independent of broader market conditions. Basically, they don't have to rely on dumping their own token emissions just to keep the lights on during a bear market.
Looking at the early capital rounds between 2021 and 2025, this was back when the team was operating the crypto payment startup Subera, we can see the seed round was led by Delphi Ventures alongside some top-tier Asian funds like Hashed and Defiance Capital. This timeline is absolutely critical. It shows us that BASED isn't just some hyped-up trend that popped out of nowhere. It's actually a multi-year incubated thesis. These DeFi-native research firms had deep, long-term conviction in the team's ability to execute years before the BASED super app ever even launched.
Now, let's take a closer look at the makeup of that recent Series A. On one side, we've got Pantera Capital leading the round. Why is it a big deal that Pantera, one of the oldest crypto-native VCs in the space, led this round a full 8 months after the base product went live? Because it means their investment is backed by real user data and actual revenue metrics, not just a flashy white paper. They literally saw the machine working before writing that biggest check. On the other side, we have Coinbase Ventures coming in as a strategic investor. A direct relationship with Coinbase's venture arm implies some serious strategic alignment. That gives the project a massive advantage when it comes to navigating future regulatory hurdles and locking down premium market access.
Moving right along to Section 2, Tokenomics and Supply, where we'll look at the asset rules. The fundamental contrast in how this token is structured is laid bare right here. On the positive, bullish side, BASED operates with a strict 1 billion fixed supply cap. That means zero inflation, there's no guaranteed dilution from ongoing emissions, so the token's value is purely a function of demand against that circulating supply. But on the flip side, the direct structural risk is the overhang. Roughly 76% of the total supply is still locked up. So what does a 76% locked supply actually mean for the market? Well, it means retail investors trading the token today will eventually have to absorb significant sell pressure down the road when those early insiders and team members inevitably unlock and liquidate their portions.
If we break down those allocations straight from the data, we get a really clear picture of who controls the supply. It kind of helps to group these numbers together to see the narrative. If you look at the insider allocation, so that's private investors at 20.4% and the core team at 20%, that's roughly 40% of the supply. Contrast that with the public and growth side. Ecosystem and community rewards hold 23.6%, the community airdrop is at 23.5%, and Athena integrations make up 12.5%. So that's about 60% dedicated to the public and ecosystem expansion. But remember, as it stands today, only about 240 million tokens, or just 24% of this whole pie, are actually circulating out there in the open market.
One of the most strategic ecosystem moves here is the specific 7.5% allocation set aside for the Athena community. Athena's USDE has proven to be one of the fastest-growing synthetic dollar protocols in DeFi. By directly allocating a chunk of the base supply to Athena users, the team has structurally aligned their consumer app with a rapidly expanding stablecoin ecosystem. It's a very deliberate, calculated move to capture cross-protocol liquidity and bootstrap user acquisition straight from an already highly active DeFi user base.
All right, Section 3, Market Overview, focusing on public valuation.
Tracing the price history factually, BASED launched at a token generation event price of right around 5 cents. Driven by that Pantera Series A announcement and broader Hyperliquid ecosystem momentum, it surged a massive 520% to an all-time high of 31.1 cents on April 16, 2026. But, as happens with a lot of token generation events, gravity took over.
The asset went through a definitive 73% drawdown, eventually settling into its current June 2026 range of about 8.3 cents. This kind of volatility perfectly maps the transition from that initial launch hype right into post-launch price discovery.
Looking at our current market data snapshot, that 8-cent price point puts the fully diluted valuation, or FDV, at approximately $83 million. Now, why is an $83 million FDV notable in this case? Because in the context of VC-backed consumer apps, it represents a potentially anomalous discount. Think about it for a second. We see so many vaporware projects launch with fully diluted valuations in the hundreds of millions without a single active user. So, to see a live, revenue-generating app, one that was active for 8 months before Pantera even led the Series A, sitting at an $83 million FTV definitely catches the eye of institutional researchers. A hard supply cap, Tier 1 institutional backers, and a sub-100 million FDV is a highly unusual combo in the current super app sector.
But perhaps the most telling metric on the board is the volume. The token is seeing roughly $18.8 million in 24-hour trading volume against the circulating market cap of just $19.9 million. A volume to market cap ratio approaching 1-to-1 is extremely elevated. So what does aggressive price discovery like this actually mean for a regular trader? Well, it means high liquidity, yes, but it also practically guarantees high short-term volatility. Without any hype, this data strictly indicates that the asset is absolutely not in some quiet accumulation phase. It's being aggressively and continuously traded by highly engaged market participants.
And that brings us to our final section, Section 4, Exchange Listings and Markets, taking a look at global venues.
Detail by detail, the specific exchange footprint for a token with a sub-$20 million market cap is disproportionately strong. If we look at the data geographically, we can see exactly where the capital's flowing. HTX is pulling in $9.37 million, and OKX follows with $5.45 million. Together, these two venues are absolutely dominating the Asian liquidity for this asset. But crucially, we also see Coinbase holding $1.29 million, providing a very rare and fully compliant bridge directly to the heavily regulated U.S. retail sector. Meanwhile, over in DeFi, Uniswap v3 is capturing the native crowd with $1.28 million.
This comprehensive listing data really confirms exceptional global market access. Having a direct channel to U.S. retail via Coinbase is a milestone that most assets of this size literally never achieve, and it's strongly correlated with Coinbase Ventures' early strategic investment. Furthermore, the asset is currently listed on the Binance Alpha Airdrop program. Now, it's vital to note, objectively, that while this signals Binance's awareness of the project and its integration into their ecosystem tools, a full spot listing on the world's largest exchange hasn't actually happened yet. The infrastructure is absolutely there, but the final switch hasn't been flipped.
That's part 2 of the based deep dive on NBZ Research. Part 3 is the finale: competitors, full risk breakdown, and the research verdict. If you're finding this series valuable, like this explainer, leave a comment and subscribe to NBZ Research so you catch part 3 when it drops. See you there.
So, with a massive institutional war chest, but a looming 76% locked supply overhang, the ultimate question remains: can Based's real-world utility outpace its future sell pressure? We'll answer that in part 3, educational and informational only.